If you're worried what's going to happen to your favorite tech stocks this coming week, you found the right video. We're going to run you through Palantir, SoFi, NVIDIA, AMD, Intel, Tesla, United Health. We look at some of the bigger tech stocks as well, like Apple. We look at the NASDAQ and the S&P market overall. And when I look at the stocks that are making us money, and I'm just putting on the screen here the stocks that we've covered in recent YouTube videos, the reason we're making money on them, me and Winston, isn't because I know everything there is about the business. It isn't because I've fallen in love with the company, or it isn't because I contracted conviction. There are apparently meds for that nowadays, by the way, if you suffer from that. It's because it is much easier to make money on the stock potentially if Wall Street's great big pot of money is also buying that stock, right? It's just easier. So all we actually do here is we follow the money. And the way to do that is to look at the stock chart. And I used to look at these squiggly stock charts and thought, this is a lot of nonsense, what a waste of time. And now it makes me money because I had a boss, you see, who taught me about squiggly lines. And when it's your boss, you don't question it, you just follow, because otherwise you get kicked out. Whereas when you have the luxury of learning this from home, well, you can doubt things and you can say, no, it's all about fundamentals. Fundamentals are an important part. I'm not discounting that, by the way. But if you want to get, say, to know when to sell, then the only thing that really matters, in my humble opinion, is whether the money is leaving the building. And I will literally teach you that very rule, like literally when to sell, because I think it's the lowest hanging fruit for retail investors like you and me, is just selling better, selling at the right moment. And that doesn't mean, by the way, the very top of the market, because that's impossible, but at a better moment. Because most people have these beautiful gains and then they give them all back to some bugger on Wall Street, and we can avoid that. If you want to learn that, by the way, I will teach you that on Tuesday at 9 p.m. New York time. That is on Tuesday, 9 p.m. New York time. There's a link down below, felixprehn.com/training, and you can sign up for that completely free of charge, part of our mission to make 1 million people financially freer. So what do you see when you look at the Palantir stock chart? Well, I always see heartbeat patterns everywhere. And they look like that. They look like squiggly little lines. And essentially there was a top here at sort of 188 or thereabouts. There was one that was just a little bit, actually pretty much exactly the same level. So that's sort of the zone that we have, that resistance. Every time we go up there, we hit our head. But there is also good news. And the good news is that every time we drop, just put a line under each of the lows here, what do you see? Well, we always bounce back up, right? And that's quite a positive thing. So overall, yes, this stock is stuck essentially in this zone, but that isn't really a problem. It just means, we come up a lot, there's a little bit of exhaustion, very little selling down here. Everyone's just kind of waiting. Doesn't mean I'm buying it here. For me personally, Palantir becomes a buy again above 190. And maybe that seems odd. Why the heck do I want to pay more for my stock? Well, it's very simple. Again, a question of probabilities. So today, there is a 50-50 chance it's going to go up or going to go down. And I really like those odds. So I would like to improve the 50 number here to something greater. And then that happens typically when you break out of these zones. And the reason for that is that everybody on Wall Street watches the same rules. It's sort of as simple as that. So Palantir to me looks good. Consolidation. I think it's very important to have a stop on this somewhere, and that depends on your setup. It might be somewhere here, or it might even be a little bit lower, or it might even be much lower. That depends on your exposure, your position size, and how heavily you are in sort of AI and everything else. Now, moving on to SoFi. SoFi actually has a pretty looking chart here. Let me tell you what. So if we just connect the highs and then we connect down here the lows, what do you see? Well, we're basically, once again, just consolidating in this tighter and tighter zone. And that's what happens when you sort of find direction. And it's pretty good. Why? Because there are small banks in the US that are failing and everyone's screaming about regional banks. And for some reason, SoFi gets lumped in with the whole regional banking crisis. And of course, it isn't a regional bank. It doesn't have a branch. It doesn't, provide loans to mom and pop shops, and isn't massively over leveraged on commercial real estate and all that sort of disaster. So it's got nothing to do with it. And that potentially creates an opportunity. Now, I own some SoFi stock right now, not because I have conviction on it. Actually, I think it's a great business. I think it's run by a great CEO. But actually, my co-founder for Trade Vision here, he used to work for Anthony Noto. which is an interesting little tidbit of insight there. So what would I do with this? Well, what am I doing with this? Well, I obviously have a stop set up to make sure, I'm protected. And then if it breaks out again out of its recent highs here, or maybe even on the dip if you wanted to, then that could be a buy opportunity. Now, the smartest way to stay in touch with what's happening with SoFi is to add SoFi to your news watch list, download the TradeVision app, and then you get news alerts live as it happens, when it happens. And the beauty of that is, and there's some really good stuff on here, like the Intel for stuff, the Oracle yesterday, Apple's Formula One deal, and so on. And I'm only getting news on the stocks that I care about, nothing else. No politics, no noise, no gibber, no woke bollocks. And I don't have to read the paper. I don't have to read the FT or, Bloomberg or watch CNBC. And it saves me a ton of time because all I care about are the news items that are going to move my stocks. Not all the news items on my stocks, because again, that's noise, but just the news items that actually move my stocks. And that's basically what you get if you grab yourself some TradeVision, which is this platform and this app that we built. And there's a week's trial, and there's a link down below. freeexpensive.com/TradeVision. So get your pause on that. Now here's NVIDIA, and you might be forgiven for thinking, well, that looks a bit like the SoFi chart, right? Yes, so we're a little bit, steam has gone a little bit out of the market. We're just kind of zigzagging sideways a little bit. Not a bad thing, it's just part of the full patterns of the market. But if you look at where we are right now, we're basically in July. So what does that mean? It means this entire time, we've just done a little bit of a zigzag job here, but we essentially are going just purely sideways. Now we're at the top end of that sideways zone, which is quite of a good thing for NVIDIA. I've put out a video yesterday on the whole AI circular funding malarkey. You might want to watch that. I do think these AI stocks are going to go higher. My personal opinion doesn't mean you should act on that. But eventually, stuff's going to hit the fan. And you want to make sure you're protected. You want to make sure you've got some automated selling setups so you lock in those gains. But no, this isn't terrible. There's nothing particularly wrong with it. We've managed to bounce off the 50-day moving average line here 4 days in a row, which is actually a very, very supportive thing because it just means the dip buyers are still very, very strong. So again, not the sweetest entry point. If you wanted to be really like gung-ho on it, yeah, you could say sort of above that zone here might be an entry point, 185 or something like that. I think the more prudent thing would be to wait for the previous highs up there. The closer would be at around about $190. But again, not advice, just my opinion. So you got to come to your own conclusions on that. But again, make sure you get the news on AI because someday this is all going to change. And you're going to want to be one of the ones who knows about that, right? Now, AMD here, tremendous breakout on that, the Oracle deal? I think it was the Oracle deal, wasn't it? And it's very, very positive for a stock when it breaks out. So there's a gap up here, right? So you get a big, beautiful gap up. And you don't go back down into the gap. In fact, it's just continuously gone higher. It's formed a bit of a top up here around about 235, 240. So 240 is your new resistance, as the Frenchies say. But overall, this looks very good. And the last 2 red days we had here, we had very low volume. So again, people are not really selling this. They expect this to grind higher. So if you're an AMD, congratulations. This looks pretty good. Next breakout will be, in my opinion, when we go 240 above. But again, just my humble opinion. Now, what about Intel? And I showed you this, is that the news from yesterday was Intel rises as traders circulate talk of a large AI client for Intel's foundry. And that came out there, obviously live as it came out, not as I'm showing it to you right now. But to me, those little news nuggets are like, okay, this is really, really useful. Very, very useful information. And I tell you what I like about a stock. And there's a little bit of wisdom in education in this. You see the stock sort of bounced up here, right? And then what did it do? It did this sideways action, which I call a heartbeat pattern. Then it broke out again here, retraced a little bit, which is quite normal. Second chance, we call it. You get a second breakout, retraced a bit. You get the third breakout, and now we're consolidating again. And that consolidation is a happy place to be. But there's one way you want to protect yourself. There's one way you want to set some sort of stop so that if it does drop significantly, then you're going to take profits and maybe that's here, maybe that's there, maybe that's here. That depends a bit on your overall portfolio setup and how exposed you are to the sector and all that kind of good stuff. which we're going to talk about a lot on Tuesday. If you join me, felixprehn.com/training live. And what will be the entry point for me? Again, all the financial advice. For me, I look at look, what's the recent highest close? So there's one here, right? That's one there. The red one's closed down there, so you can ignore those. There's some here. So it's kind of that zone there. So if I then look at, well, what's the dollar amount? I'd say $38 and above. So for me, Intel above $38 would be potentially a buy. Now, kind of crazy to think that I'm willing to pay more for a stock than it's worth right now. Well, if you think it's going to go up, why don't you buy it right now? I'll tell you why. Because right now, a stock in that setup has basically what all the studies show. There is a 50% chance it's going to go higher. There's a 50% chance it's going to go lower. Do you like those odds? I don't. No, I really, really don't. Whereas once you break through the resistance, and every trader in Wall Street uses the same rules, once we break through the $38 here, this upside becomes a greater percentage. I'm not going to give you a precise number, but it's going to be a greater percentage, much, much less likely to collapse. And by the way, stocks in this kind of pattern, when they do collapse, they don't do sort of this sort of a thing. They tend to do that, right? Drops are usually much, much more rapid than upside. So ultimately, your success is going to be about how you manage the downside and how you collect profits when it drops, how you get out, how you protect yourself, which is why we're running that training on Tuesday. But yeah, there was Intel. Looks good to me. Just a smidgen early right now. Now let's look at something a bit different. Good old Tesla. And what do you see here? Now, someone's going to write, oh, he's always talking about the past. You can't predict the future and all that. Can't predict the future, but I can look at the way the chart looks, the way that everybody on Wall Street does, and it makes it much, much, much more likely that we catch the gains. So what do we have here? We had a zigzaggedy upside thing, right? You draw a little line across those tops there. I'm doing that fairly poorly, but you get the idea. And what happens the moment we break out of that zone? Can you see the volume down there at the bottom? Can you see the volume down there? What happens with the volume? Well, actually, I've got an indicator on that. Volume moving average. It goes very, very significantly up, which is all that matters. What makes volume go up? Big money buying it. Where does big money come from? Wall Street, right? So you might not believe in it. You might not be a believer. That's okay. No beliefs required here. Just keep looking at charts and you'll see the same pattern again and again and again and again. And eventually, you'll become less doubtful. I used to be a doubtful. I used to think that these squiggly lines are a bunch of nonsense. Now I make money with them. And it's just a question of, are you willing, are you open to learning what Wall Street does? Because the thing is, when you work in a bank and your boss tells you this is how it works, you don't really question it. But when you're at home and you're like, no, I've done this, or I've got conviction, then yeah, it's easier to sort of reject it as silly. So what are we seeing with Tesla? Well, look, we've got some quite nice highs up here in sort of 460, 450. We're at 439 right now. We need to break through that again to get out of this. Earnings coming up, they're rarely a good event for Tesla because at this point, Tesla is largely a car company. And so here was the last one. It dropped very significantly on that. Previous one did a little bit. It kicked off a bit of a rally there, in fairness. But most of the time, earnings are not great for car companies because we already know how many they delivered. We know how many they made. We know their margins. So how do they move the needle? Tell us a beautiful story. Well, Tesla tells us beautiful stories all the time. So I wouldn't be surprised if this thing goes sideways for a little bit. Long term, I think their technology has the opportunity to be amazing and make people a lot of money. But right now, the chart is just one of those sideways actions. And I'm sure a lot of the Teslarati will be like, I've been in Tesla since 59 cents. And good for you. Good for you. You've got that kind of patience. Well done. Now this, my friends, is UNH, which is a stock that's gotten really, really hammered. It was trading at $600. It came all the way down to 230. I nibbled on this a bit somewhere down here, and I made a video on that. And I said, this is a very, very high risk move, but it could be very rewarding. And it has been so far. I don't know, up 20% or something. Now, there is still a bit of a fly in the soup here, waiter. What is that? That line there is the 150-day moving average line. That is your investor's line. You're above it, a stock is generally investable. When it is below it, it generally is not. And what are we seeing? We're seeing a failed attempt to break out of it for the last, call it 2 weeks. So what does that mean? It means it's still a little early. And I think that's a good thing in some ways. So from a chart point of view, this is not the greatest entry point because it just isn't. We've bounced off this 150 line here one too many times. Do I think we're going to take it out eventually? Probably, unless something bad happens in earnings coming up. And maybe that's why there's a little bit of caution. People are just thinking, well, let's just wait for earnings before we buy some more here. But I think it's potentially one of those value plays, which is a dangerous thing to say. But it is still very risky because it is below that 150 moving average line. So just putting that out there. Let's have a look at something a bit bigger. By the way, if you want to cover other stocks on these week reviews, just put it down below in the comments. And I'm happy to take those into account. This is Apple. And Apple, after a pretty horrible start to the year, has managed to somehow recover. And is it looking good? Well, if you are an Apple fan, and for me, fandom doesn't come into buying stocks. I really don't care about the businesses, to be honest with you. Well, I do. I mean, I exaggerate. We do look at the fundamentals, of course. And if Apple does have a good business, they just have an innovation problem, potentially a growth problem. But what we see here is that every time we see the little dips, the market seems to buy it. And that's quite a good thing for them. That yellow line there, a 50-day moving average line, we are well above that, been above that since August. And therefore, it's still in an uptrend. But you are getting some resistance up here, which is about 257 or something like that. And so ideally, you get a breakout above the 257, and at that point, you have a bit more momentum to take us higher. Because at the moment, very little momentum, very little volume. Again, that could be because we're heading into earnings season. Let's have a look at the QQQ overall. And what do you see there? Well, I see a beautiful, absolutely glorious trend since like June or so, where we've just been trending upwards, just going up, almost in a straight line with the occasional bit of excitement thrown in just to make life a little bit more interesting, like last Friday and so on. But look at last Friday, right? We went all the way back down to 589. We are now at 604 again. So we're back over 600 and on pretty good volume this week as well. So the market is still strong. Fundamentals are still strong. The AI excitement is real. The US government is throwing money around like it's Christmas. And therefore, it's kind of hard to see how this collapses in the short term. And that's exactly what people say at the top of the market, which is why every single position I have has an automated sell point. It'll take profits at a certain level. And I would recommend you learn how to do that yourself. Shall we have a look at maybe SPY? Well, what can I say? It looks pretty much exactly the same as the QQQ chart, right? It's the same thing. It's just been an absolute glorious run up since May. Looks good. We've survived the Friday crash. The week has been quite nice. We're trading at 664 here. So this overall looks quite good. Now, let me give you one more, which is one thing. If you're only going to look at like one chart a day, I'd look at VIX. It's the fear index. And it tells you, are people fearful? People are fearful. Likely bad things happen in the market. And we were, on Friday, we were at 28. We closed at 20. That's a huge move down in the reduction of fear. And that's a very, very, very good thing. So we're not quite back yet down to sort of, the 15 of the week before. But this move down here means good things likely coming because people are not that fearful anymore. So it's a still, in my opinion, a big, beautiful market. A VIX of 20 is nothing terrible. Be nicer to come back down below sort of 19 or thereabouts to get a little bit out of this zone. But it is nothing like the craziness we've seen before. We're surviving another little mini bank crisis and all sorts of things. And the market just going, we don't care. We've got AI. We've got money printing. We've got falling interest rates. And I think that kind of sums it up. You got some value out of this? Come and join me Tuesday at felixprehn.org/training. I'll teach you when to sell. It's the number one skill. People always think I need to find the greatest stock in the world. You actually don't. You just need to make sure that the stocks you have that give you gains, that you keep those gains and you don't hand them back to some bugger on Wall Street. So there we are. All the best. Well, NVIDIA just set a $4.5 trillion market cap, and AI stocks are pushing the S&P500 to .com bubble levels. There is an $800 billion dead bomb ticking in the shadows that almost nobody is talking about. And when it explodes, it could take your entire portfolio with it.